As a business owner or real estate investor, you're always looking for ways to protect your assets and maximize your returns. One of the smartest moves you can make is starting a real estate holding company. Let's dive into what this means and why it's essential for your financial strategy. A real estate holding company is essentially a legal entity, often structured as an LLC or corporation that owns your real estate investments. Instead of having properties tied to your personal name or your operating business, you place them under this separate entity. This separation is crucial. It shields your personal and business assets from any legal claims related to the properties you own. Imagine the peace of mind knowing that if something goes wrong with a property, your personal finances are protected. Now, let's talk about tax efficiency. Real estate holding companies can provide significant tax advantages. They often benefit from pass-through taxation, which means the income is only taxed at the individual level, avoiding double taxation. You can also take advantage of depreciation deductions, which can lower your taxable income. This level of control over your tax strategy is invaluable, especially for entrepreneurs juggling multiple ventures. Scaling your real estate portfolio becomes much easier with a holding company. If you're looking to buy multiple properties or expand across state lines, having a dedicated entity simplifies management and financing. Banks typically view organized entities more favorably, which can lead to better financing terms for commercial real estate loans. This means you can secure funding more easily and on better terms, allowing you to grow your portfolio faster. Another critical benefit is the separation of assets. If your operating company faces litigation or financial challenges, your real estate assets remain protected. This is a vital consideration for any entrepreneur. You want to ensure that your hard-earned investments are safe, regardless of what happens in your primary business. Structuring your holding company is straightforward. Most entrepreneurs opt for an LLC due to its flexibility and favorable tax treatment. You can choose a single-member LLC for solo ownership, a multi-member LLC to include partners or investors, or even a series LLC to isolate risk among different properties. Each structure has its advantages, so it's essential to consult with an attorney or CPA to determine what fits your goals best. Let's consider a real-life example. Suppose you run a dental practice and want to purchase your office building. Instead of buying it under your business name, you create Bright Smiles Holdings, LLC. This entity leases the building to your practice. Now you benefit from rent as income, depreciation on the property, and the added layer of asset protection if your practice faces legal issues. Plus, you have a solid framework in place to acquire more real estate in the future. Getting started is simple. Speak with a qualified attorney or CPA to discuss the best structure for your needs. Then, form your entity through your state's Secretary of State. Open a business bank account for the holding company and purchase properties through this entity. Finally, set up leases between your operating company and the holding company to ensure everything is in order. In conclusion, establishing a real estate holding company is a game changer for entrepreneurs looking to protect their assets, reduce taxes, and grow their wealth through commercial property. Whether you're a dentist, investor, builder, or business owner, this strategy is foundational to achieving your financial goals. Don't overlook the benefits of creating a holding company. It could be the key to your success. If you're ready to take the next step, now is the time to act. Start your journey towards financial security and growth today.